All right, we've got a big hour ahead and a lot of Fed speak with us today. Just yesterday, Steve Leisman spoke to Fed Vice Chair Richard Clarida, who questioned whether the markets really expect a rate cut later this year.
What I prefer to do is to also look at surveys that many folks do of market participants about what they think we're going to do. There's obviously a probability of outcomes, but I don't think when you ask folks, they're pricing in that rate cut now, even though market pricing might suggest that.
We are joined this morning by St. Louis Fed President Jim Bullard to talk about the economy, emerging risks, and the outlook for interest rates. And it's great to have you here, Jim. Thank you.
Great to be here, as always.
Steve Leisman is with us as well. And Steve, it's great to see you.
Even
Welcome
better.
back.
Yeah, it's great.
Welcome back. Jim, let's talk a little bit about what we heard from Rich Clarida yesterday and just how you see the economy right now. How are things shaping up? How do you handicap what's happening with the coronavirus? What are you doing right now to really try and gauge the economy?
Yeah, on that clip there, Rich was talking about market pricing for rate cuts. I would describe that as a peso problem. So there's a high probability that the coronavirus will blow over as other viruses have, be a temporary shock, and everything will come back. But there's a low probability that this could get much worse. Markets have to price that in, and that drags the center of gravity down a little bit. But if this all goes away, then I expect that pricing will come back out of the market. And we'll be back to the on-hold Fed scenario.
Is that a description of your own kind of expectations of what happens?
Yeah, I think the base case is that this will, as other viruses have dissipated, this one will also dissipate. But you never know. This could be a little bit different, could turn into a pandemic. You're not sure.
It'd be good to know exactly how long SARS lasts, and not the severity of it, because it wasn't nearly as severe. And MERS, as well as the other one. We talked about SARS for a long time, and we've only been talking about coronavirus for, how long, 6 weeks?
Yeah, we looked at some charts. I would say, something like 45 days, you could actually see effects in U.S. markets without doing any special analysis or anything from these other virus episodes. And I think it was the same thing. The market is worried that it's going to turn into something more serious, but then it all goes away, and then everything returns to normal.
In the past,
yeah.
Hopefully it happens that way again.
But, Jim, what the market believes down the road is not a problem for you until you kind of get up to it, right? Which is when you look at the probabilities right now, it's kind of interesting. After Clarida spoke yesterday, the probabilities actually rose. So while the stock market seemed to say, you know what, maybe they're not going to give us that rate cut, the bond market seemed to double down on it. We're looking right now at a 51 or 52% probability of a June rate cut, at least in the futures market. Is the market off sides on that in terms of when you think about where rates are headed?
Well, I mean, if under what scenario, you got to put these scenarios out there. If you think that this virus is going to dissipate and then we're going to have a temporary shock and then everything's going to go back to normal, yeah, I think the Fed's in great shape, and we don't have to lower rates in that scenario. A lot of the news on the U.S. economy has been good in the last couple of months, and I've been arguing that we're in good shape for a soft landing in the U.S. economy. Tracking estimates of GDP in the first quarter hanging right around 2%, 2.25%, something like that. So that sounds to me like, at least as far as the assessment that we can make as of today, we're not going to see a major impact on the U.S. But, of course, you never know. It could get a lot worse.
And if we got a soft landing, how long could that extend this positive business? God, these shots are so bad when someone sits here. Anyway, let me go here. How long could that? How long could that extend the current business cycle we're in then? We could be like Australia-sized someday.
Exactly. Australia went 30 years, so,
And still going.
And still going, yeah.
Does it make sense to you when you see the 10-year Treasury trading below 1.5% this morning? I think it's at 1.49.
Yeah, so I have been concerned about yield curve issues. I would say the 10-year, 2-year, though, is not inverted. So this is kind of a level shift for both.
But it's way down, right? It's half of what it was. It
is way down. Again, I think some of this pricing will come out if the coronavirus fades in the future. So I want to see how that plays out before I get worried about yield curve issues.
I don't know if this is an easy or hard question to answer, but how do politics play, or how does an election year play into the way the Fed thinks as things may move or not in terms of what people's expectations are?
Well, we have to react to the economy, and I think if you look at past committees, we have made moves up and down during election cycles. So I think this is kind of this always comes up in the election cycle, but I don't actually think it affects the committee's deliberations that much.
Even the reverberations.
I do not think that you can win an election based on whether the central bank zigged or zagged.
No, but
but you can lose one. George Bush.
I don't really.
But
when you read the political science on it, they never talk about what the central bank did. They always talk about the failure of the candidate.
Okay, but let me ask you a question.
And
I think
he had a problem with read my lips.
I think there's a view, I don't know if it's right or not, but that if Bernie Sanders becomes the Democratic nominee and there is an expectation or greater expectation that he would have a chance of actually beating the president, that would have an effect both on the real economy, but in the immediate term on the stock market, and therefore
I'd like to get your sense of this. My sense is Wall Street is pricing in divided government, and Wall Street likes divided government. And I think for now, they're pretty confident it's going to remain divided, so they're not too worried. And I think that's where the pricing is right now.
Jim, could you come back to the coronavirus? How would a quarter-point rate cut cure the flu?
Huh?
The market has this built in. I'm sorry, I'm being a little bit, I'm a little bit of fun with it, but the market has built in, taking what you said at face value.
Yeah, I don't know.
Coronavirus hits and hurts the economy. The Fed reacts with some form of a rate cut. Would a rate cut do any good for the U.S. economy in that context?
Well, I mean, you get a cold, you maybe drink more orange juice than you would otherwise. Does that cure the cold? Probably not, but it treats some of the symptoms, and there would be clear symptoms coming from a slow China that took a long time to recover from this. That would slow global growth, and that would come back to affect U.S. companies, and so I think it might help a little bit.
I guess I'd push you a little bit more. If the problem is a supply problem, Chinese supply declines because they've shut down. Does lowering interest rates in the United States solve that supply problem? And I should have been upfront with that question.
Clearly not directly, but you might mitigate some of the implications of that for the U.S. economy.
Jim, what do you hear in your district specifically, just in terms of what's happening on the economy? We'd kind of been waiting to see what happened after the trade war. Looks like we've got a truce. Does that change? Has it changed any of the economic reports that you're getting?
I would say, to the extent we have a lot of logistics and transportation, that's somewhere where you see a lot of numbers that, don't look that good.
Right.
Intermodal is,
trucking.
Is way down. Trucking is down now. Some of that was occurring before you got to the coronavirus. Some of that is year-over-year comparison because they had a blowout year the year before. So, but still, that's a place where things are very tangible. Not enough boxes, to put on the railroad cars.
But overall, the read you're getting is that it's a pretty decent economy?
Yeah, I would say, labor market has come in very strong. Consumption seems to be holding up well. Trade issues have now maybe moved to the back burner a little bit. So I think those kinds of issues are going to help us. Ag is an area that has been hurt by the trade issue. That should rebound in 2020. They've had a couple of bad years, so hopefully they'll do better this year.
Jim, I have to ask you about the Fed's liquidity and the effect on stocks. Some people out there believe that it was the turn to increasing the balance sheet, the repo operations, the injection of liquidity by the Federal Reserve into stocks that has created this recent run-up in stocks, along with the idea that if it's withdrawn, the market could be in danger. What's your take on that?
You mean not QE?
Exactly.
NQE? Yeah, I mean, we've tried to push back against this. It's not the intention of the committee that this is quantitative easing. We're buying Treasury bills, not the longer end of the yield curve. But here's what I would say about this. The Fed cut rates 3 times last year. If you think it was easier monetary policy that helped drive equities. You got it right there. That must have been it.
Not the liquidity injection.
So why do we have to go to this story about the implementation of monetary policy at the very short end of the curve? So I think for those that want to tell a monetary policy story, there's a clear one to tell for the fourth quarter and up to now for equities. And I don't see why you have to say, it had everything to do with this relatively minor operation on the short end of the yield curve.
In the meantime, Huawei's chief technology officer, Paul Scanlon, telling CNBC that plans by the United States to create a 5G rival to Huawei could be a challenge amid growing calls from lawmakers to find alternatives for its next-generation networks. Washington has maintained that Huawei is a national security risk, alleging that Beijing could use the company's equipment for spying. Huawei has denied those claims. Scanlon says the technical standards and actual implementation of 5G have taken about 10 years to create. Jim, I know this is not your field of expertise, but do you have any thoughts on this security versus competitive risk that Huawei may pose to the United States? Is this something you guys talk about at all at the Fed?
This is out of our bailiwick. It's long been a concern that you're giving away state secrets when you trade. I think that, Kissinger's comments that we're in the foothills of a Cold War is kind of resurfacing these issues among people that didn't live through the Cold War and are not used to this kind of thing. But during that era, you would have worried about this, incessantly. And I think we're kind of creeping back into that in the current environment.
We have a grotesque and immoral distribution of wealth and income.
We're not going to throw out capitalism. We tried that. Other countries tried that. It was called communism, and it just didn't work.
Okay, you probably all have seen that before. Senator Bernie Sanders, former Mayor Mike Bloomberg at Wednesday night's debate. We're going to hear a lot more about the economy and the best way to keep it growing. I actually retweeted one of Mike's Bloomberg's memes. I don't know if it was a meme, but it was the one where he says he created the job and anybody else here created
I
the job.
Saw that in the silence crickets.
So can I say, I thought it was sort of genius, and I didn't like it at the same time. I'll tell you why. I didn't like the editing.
The editing was
why?
It was fantastic.
No,
it was funny. It was like
I know, but I
wanted it to be real. You don't think people knew it wasn't real? I
think that there's this is a huge issue on social media, which is that people are just
I'm really sorry I brought it up. It was so obvious that it wasn't real, and they took other shots of them responding to any questions that were given, had nothing to do with whether they created a job or not, and it was a joke. Andrew, lighten up.
No,
let's get to it was awesome. It was the best.
That you can't criticize.
Okay. Hopefully Facebook will ban also that people know what day the election is so they don't miss it, and it voter suppression. Anyway, let's get back to our guest host, Jim Bullard, president of the St. Louis Fed. Get a sense of humor.
Take some nice pills.
Yeah, okay. It's difficult, and it's even Friday. Hey, so what we have going now with the economy, you said it's a pretty good economy. You've seen some of the proposals of Mayor Mike about a wealth tax, about raising money here, raising money there. Would those be detrimental to the economy, or do we need some ways to raise revenue, given that we're running $1 trillion deficits?
So this is just about deficit reduction or about expansion of
when you saw Bloomberg's proposals, they're obviously different than Elizabeth Warren, different than Bernie Sanders, different than Biden. What did as a Fed guy, if he became president, what do you think that would make your job harder or easier?
As a Fed guy, I try to predict what will actually happen.
So you don't have an opinion.
Very little will actually happen because of the divided government problem. I do think that the two biggest pieces of legislation, Dodd-Frank and Obamacare, are here to stay. I think to the extent you had a backlash against that and a chance to change that, that has passed. So I think those are going to be law of the land going forward.
Okay, how about
But I don't see anything of that magnitude happening again.
Do you think a couple of pennies on every stock trade or fractions of cents is a problem? Or?
Yeah, I don't want to impede the movement of efficient movement of capital. So you do want the right investment, the right.
How
place
about if
at
we
the right
confiscate 20% of every publicly traded company and give the stock to employees? That's Bernie's plan.
Yeah, I mean, I would push this idea that that is out there that who owns the stock market, you know, and it's like, okay, it's just the billionaires.
Right.
Don't we have this big institutional investor cadre? Isn't it CalPERS? Really,
With 401ks, and people point that out.
I thought it was 2/3. Sometimes you see different numbers on that, and what is that? It's union members and teachers and all kinds of people. Absolutely.
Well, let me ask you a different question, which is you look at, for example, Mayor Bloomberg's plan or some of the other plans around income taxes on the very wealthy. Take the wealth tax out of it. What do you think the implications of that are genuinely on the economy?
So what's the proposal?
No, I'm saying any of these plans that plan to raise the top rates at the very high end, that try to close some of the loopholes around capital gains, or rather carried interest, that try to step up basis at death, all of those things, will those have real life, genuine economic implications?
So I've actually been doing a lot of work on income inequality in kind of the macro world. I don't think this kind of thing would change the inequality picture. Okay. I think about a big chunk of income inequality is actually just coming from the life cycle. So what that means is that you've got peak earning years, you've got low earning years early and late in the life cycle. If you put that together in the right way, you'll get a Gini coefficient that is close to what it is in the U.S. data.
You think it's just demographics?
A huge chunk of it is actually just life cycle.
That people there are more baby boomers who are getting towards the end of their earning cycles, or
you got peak earning years
and millennials.
You got peak earning years, so this means that in the middle of the life cycle, that's when we all earn the most. That's when we earn the most income, and we don't earn very much when we're in our 20s or late in the life cycle. So because of that, if you just do that in a model and calculate the Gini coefficient of that, you get something really close to the actual data, and you don't even need any billionaires in your.
So you're talking about, because there are so many baby boomers and so many millennials who are not in the peak earning years necessarily, that skews all of these numbers?
It doesn't skew them. It means that of the Gini coefficient is maybe this big. Maybe this part of it is just life cycle effects, and then the rest is kind of extra.
Meaning it'll wear off as the millennials get older and become a larger part of the peak earnings?
No, I don't think so. Another thing that's happening is that...
Oh, you just said you don't think so. So then what?
This is not a story about more young people or less young people or anything. This would occur regardless of that issue.
Okay, but let me ask you. But let me just back to the tax issue. If you were to raise revenue this way, would it slow the economy? If you were just focused on this top group, right? If you raised the rate on top earners in America, you closed the step up at death, you got rid of the carry. I'm saying, what's the drag on the economy or not?
Here's what worries me as an economist. You're going to take that piece of capital that would otherwise be allocated to some company or something like that.
Well, that's the question.
And then you're going to take it, and what are you going to do with it? What are you going to do with it? If you're going to take it and do something really smart and really great public capital, that might be good.
If I told you,
but if you say, I'm going to take that and I'm going to have a party because I'm going to hand it out to my friends and we're going to have a party, that's going to hurt growth. So that's
going to hurt growth.
Yes.
Great, because some people believe that if you gave it out to people, it would actually help growth.
Yeah.
Right?
I think
by the way, that's the argument that you'd hear from most Democrats.
I think if you want to tax, you want to use it for public capital that's going to increase the productive capacity of the economy. There are plenty of things you can do that are like that. But if you say, I'm going to pass it out to people so they can consume today, that's not improving the productive capacity of the economy.
What happens if you use it to pay down debt? Useful or not useful right now?
Yeah.
It's a big question.
Yeah, it is, and we're doing a lot more work on that. I'm trying to rethink government debt. Some of you might know Olivier Blanchard gave a presidential address to the AEA about a year ago and kind of raised questions about what is our conventional wisdom about government debt. Mm-hmm. The idea that 60% of GDP is the limit, and that seems to be out the window. Doomsday scenarios about carrying too much debt don't seem to be working. So I think as macroeconomists, it's incumbent upon us to get more granular and more serious about what we're going to say about government debt, because I think to say the sky is falling all the time hasn't been working.
Jim, let me ask you a couple of questions that Steve Leisman sent in. They're good ones. The minutes earlier this week were full of concern that Fed officials think market valuations are high. Are you concerned about market valuations being too high?
We always watch this, and we watch financial stability issues and bubble-type issues very carefully. I think that conventional wisdom is that valuations look high, but not at this level of interest rates. And so to the extent you think this level of interest rates is probably the future, which I've been arguing, I think we're okay for now. But we do watch this.
Another question that he asks is, what does a supply shock in China mean for the U.S. economy? Could it be like the oil shock of the 1970s with higher prices and less growth, kind of like stagflation? Do you worry about that?
I haven't worked out that scenario, but you could make an argument if you had further amplification of the virus in China that it would have major disruption, both on prices and output globally, and maybe some of that would feed back to the U.S. But I don't have a real sharp prediction on that.
You're so living in the past. You still think that sometimes money is better left in the private sector, where entrepreneurs and others can actually use it to make investments rather than in the public sector. You still think that, given that there's not a single person under 30 that believes that listens, that feels the burn. I mean, we are being told now that profiteering and using money in the private sector is only to grease their own pockets instead of,
this is a powerful economy with lots of great market outcomes. There is a role for government.
Right.
It is important, but you really want all that innovation that we got over the last 25 years, new products. You don't see that elsewhere in the world.
No,
that's why the U.S. is a world leader.
But and I'm not going to bring up Reagan, although I just did. But he says, every generation we need to educate, because we're only one generation away from not understanding how. And we're revisiting Venezuela and Cuba and democratic socialism. It's not really socialism. And Denmark has a better standard of living than us. We're revisiting all of this stuff, and someone needs to be there to
That's fine. Make the debate.
Why is it?
Make the case, and I think I think that's what we macroeconomists should be doing.
If Sanders is ahead by, what'd you say? How many points? This could not just be an intellectual conversation we're having right here. There could be a lot riding on 2020 if that's really true. If you believe those numbers.
Yeah.
You think this whole American experiment for the last 250 years, whatever it is, you think it gets halted in its steps, although you think it'd be a divided government. Even if Bernie got elected, you wouldn't worry that much?
I think it's very tough in Washington to get anything done, and so I think that's
a saving grace.
I think that's what Wall Street is pricing. That's my sense of why Wall Street is not worried.
We saw what Obama was able to do in terms of increasing regulation, and we've seen what Trump was able to do in terms of decreasing regulation. So there's a lot that can be done.
The deregulatory agenda, I think, has been important, and I think the pendulum tends to swing too far in one direction. You got to pull it back a little bit and get the right level, get the right type of rules, and above all, get understanding of, okay, here's what the rules are, please go ahead and conquer.
Well, that would be my question. It seems to me that with such a divided populace at this point, where you have such extremes kind of getting put in place, I don't know, you talk to doctors and they'll pull their hair out. They've tried to go along and come up with all the things that they've been told to do for the Affordable Care Act, then tried to undo that and then try and get ready for whatever comes next. If it's affordable health care for all, how much does that change the situation? It's just more than anything, I think executives, companies, all of these places want to know what the rules of the road are and don't want to change them every 4 years.
Yeah, and that's a refrain that you often hear. I also think that, sort of conceptually, we want to think about helping the poorest segments of our society and doing right by them. Mm-hmm. But those that can afford things and let them run with it and have their own insurance and do it the way they want to do it.
Okay, great. You will be with us. You've got, I don't know, you've got 18 minutes to continue to try to help the good guys here.
Yeah, I mean, I think the issue on economic education is a serious one, and we just have not done a good enough job. So,
online banking, we can roll out to 3 million clients now at a level that we haven't been able to do. They have $60 billion in deposits, $40 billion on balance sheet. We're able to do things with that with our funding. They have tremendous number of clients who leave their organization over time as they want a financial advisor. Now we can be that financial advisor.
That was Morgan Stanley CEO James Gorman yesterday discussing the benefits of its E-Trade acquisition. The deal also points to the changes that are happening in the banking industry. And I want to go to Jim on this, which is, what do you think this says about the changing landscape and how the Wall Street banks are shifting and how you see them?
Yeah, more consolidation. It's not surprising at all. I think the whole concept of a company like E-Trade, that they were going to, I don't know, be the trading company of the future or something like that. You know, I don't know. I'd leave it to others.
Let me just ask you a consolidation question, though, which is there has not been a lot of consolidation in the banking space post-financial crisis, and we're still now 10 years plus.
I don't know about that. I don't know if I agree with that.
Some of the smaller banks. The question is, you look at Morgan Stanley doing a big transaction like this.
Community banking is 3 to 4% a year, and it could accelerate.
Do you think some of the big banks should or could be able to get bigger? Would you want them to?
I have not wanted that. I want plenty of competition in this space, so I like them where they are, or even smaller.
And what about, and one of the things you're seeing Bloomberg just proposing it this week around the Volcker Rule, again, this idea of what a bank is supposed to be, how much trading they can actually do, what kind of proprietary acquisitions they can make to add on to their business or not.
I think the cows are out of the barn on that, so I don't think we're going to be able to go back to anything that splits investment banking or commercial banking. It was getting tired even 20 years ago, and I just don't think we can go in that direction. But what we can do is, be vigilant, keep an eye on these companies, and if you have plenty of them, then you can let one fail and it'd be okay.
Where do you see the risk right now? If you were to say there's risk in the market, to the extent that people think that we're in some kind of bubble, people look at different corporate debt levels. What are the numbers that you go?
A good outcome of the crisis is that we put in much better intelligence and radar, and we focus on these issues a lot more. The FOMC gets a regular quarterly report on the state of affairs. We track all different types of things in markets. I would say financial stability risks are moderate at this point, but we do think about this and worry about this a lot more than we would have 15 years ago.
So you don't see
I don't see anything of the magnitude.
Risk.
I don't see anything of the magnitude of the housing bubble.
Right.
I don't see anything of the magnitude of the dot-com bubble. There are certainly areas you could argue about, but I don't see anything of that magnitude right now.
You worry about lower interest rates. If you are looking at lower interest rates being at these levels for a longer period of time, what that means for the banking industry?
It means it's hard to make money. They have to change their business models. I think they're very savvy. I think they have done that. More fee-based income, other types of products. So I think business models will evolve to handle the lower interest rate situation.
And the other question I was going to ask you is just the rise of ESG, because we haven't had this conversation. I'm just sort of curious how the Fed even thinks about this. You have companies that are now talking about purpose over profits. Over in the past couple of months, you have all these companies, Microsoft and others, planning to spend real money on climate change, combating climate change. They're going to be buying carbon offsets. Delta's announcing they're going to spend $100 million a year to actually buy offsets. What do you think about the productive use of capital in this environment?
Well, is it just me, or has this not been going on all the time? I mean, I felt like this was going on in the 80s. Corporations wanted to position themselves to be friendly in the current environment in which they operate. They want to do nice things for the community.
So do you put the Delta money in the market? I mean, by the way, you could say Delta's going to spend $100 million on these offsets, and you could say that's their marketing budget for the next year. By the way, that would be the very skeptical, cynical take on that.
I think they're trying to appeal to customers, and the customer is changing tastes. They care about these issues, so they say, okay, we're going to do something. Now, somebody else might say, oh, I'm not going to take that airline because they're doing that, and that's driving up my costs, and therefore I'm going to go to the low-cost airline that doesn't do that. But to me, as an economist, this is just markets at work.
I mean, there was a piece in the journal pointing out that when CEOs start trying to influence or go along with the prevailing social wisdom, that once again you're actually lessening democracy, and you've got where money is centered is again starting to influence social mores, and the CEO should have one thought in mind.
What do you think about?
Well, then you're cynical, though. You think it's just marketing.
Yes.
You think it's just marketing.
What do you think about the Catholic supply store? I mean, they're appealing to Catholics,
right?
And that's their market, and they want to be nice to their customers, and they want to provide a good product.
Shareholders can do what they want. I mean, but I'm just saying that there's two sides to all these cultural issues, and when a CEO that lives in New York decides that he has all the answers on one or the other side of one of these issues, that you're not necessarily going to.
I guess what I would say is that there are pitfalls in going in this direction, so that you can go too far or try to appeal to a certain segment, and then you offend somebody else who's a key customer.
That's going to happen.
That's not going to work out very well. But this is what they get paid the big bucks to do.
Right. But I guess the reason I'm asking the question is you have companies like Microsoft, or put it on Amazon, which are going to spend an inordinate amount of money over the next 20 years trying to get to carbon neutral. Right. That's going to and you could. Maybe you're arguing that's strictly marketing. I don't know, but does that change the outcome? Should they be thinking about these? Should they be thinking about climate change as a potential problem in the way that Larry Fink is sending letters to CEOs?
Amazon has the biggest carbon footprint on the planet with all the deliveries.
It doesn't have the biggest, but it has a huge
one of them. So they need to PR their way into not being so. Horrific to the environment.
Well, the question is that's the question. Is it PR? Is it actually good business? This is what I'm trying to get at.
Well, it's his own personal.
I'm saying it might be good business to the extent that they would otherwise lose customers who are.
But you think it's simply in that?
Who feel like it's bad for the environment.
It's not in any. It's not in that the environment's going to actually hurt their business. That's whether it's actually coming into.
It can hurt their business if people say, "I'm not going to use Amazon."
No. I'm saying if there are more climate issues that would therefore affect their business.
There's a crisis,
you're actually seeing it.
It's a crisis.
Jim, thank you for joining us today. We got to go.